Yes, sir. You already know that your boy B Hayes. We back with another one. Let's go ahead and jump right into it. We don't like to waste nobody's time. Before we do that, let's get this video a thumbs up so it can reach more people. Today we'll be touching bases on AMC and GameStop. Could AMC, GameStop, or Sundial Growers shares fall to $0? So no matter how long you've been investing in the stock market, there's always something unique going on. Last year it was Wall Street navigating its way through an unprecedented pandemic. Meanwhile, in 2021, it's all about retail investors whipsawing equities. So if I mess up on any words reading through, feel free to correct me in the comments down below, y'all. So beginning in mid-January, retail investors from Reddit Wall Street Bet chat room began allying with each other to take on institutional investors and hedge funds with large short positions in selected stocks. Short sellers are investors who make money when share prices decline. So in simple terms, and throughout this article, y'all, I'm gonna be simplifying parts of it so we can scan through it. You know, I don't like to hold y'all, I don't like to waste nobody's time, so I'm gonna just summarize it for y'all. So in this part right here, in simple terms, they basically referring to how retail investors noticed the short interest that hedge funds had on these stocks like GameStop, BlackBerry, AMC. They had a huge amount of short interest in these stocks. GameStop was one of the ones they had the most we ever seen and was kind of unlawful. Like, it seemed as they was breaking the law. They was over 100% short in GameStop, like over more than the shares that's outstanding. They was short more in GameStop that was available in shares, if that makes sense, y'all. Like, they went over the percentage. Like, if I'm only able to buy 100 bananas, you only got 100 bananas, but I want to buy 110 from you. Like, I'm doing over the top. Like, that was just extreme. So that's why I'm glad this thing squeezed like that and they got it handled to their asses. And that's just showing y'all, that's why I love it. It's more black people, more Latinos, more of everybody just coming together and starting to understand the market. And us as retailers, we finally, with the power of the internet, we finally got enough power to go against hedge funds. Because usually before, not to make this too long, the hedge funds got so much money, millions and billions of dollars, that whenever they go together and put their minds together on the stock, they can basically take control of where the stock is going. That's how they continue to win decades and decades. They on top of their top tier. But now, since the internet of things have changed. Like with Wall Street Bets, you got over 5, probably now 10 million followers following this thing. You got all other platforms where traders, retail investors coming together with their mindset, and we all could attack one stock. And once 10 million, 5 million degenerates, small retail investors going against hedge funds, it's not that many hedge funds, but they do have an ass of money. But with retail investors, when you put millions of people together, that money adds up, because out of the millions of people, it is a good percentage, 10%, 20% got over 6 figures. 1% of the retail investors got over $1 million. And then the other ones, all the small, you got millions of people with over $1,000 or a few $1,000s. And then you got, even more millions with just a few $100s. So when you start adding all that paper together, woo, now we is a power couple. It's like war against war, hedges against the retail investors now. This is what they didn't want. That's why we need to stick together and keep this going, keep it as a movement, y'all. But back into this though, I just had to bring that to y'all attention. That was a long story short on that clip right there, that part. Now let's continue. Could GameStop go to $0? There's little question that GameStop has some serious challenges that lie ahead. This is a company built on a brick and mortar business model that worked very well for a good 2 decades. But with gaming pushing into the digital realm and GameStop stuck with its brick and mortar platform, it now finds itself behind the 8 ball. But there is good news. Like I told y'all, with the Chewy investor that invested in GameStop, he now know about the digital stuff. So he trying to turn GameStop around for the better and turn it into this digital platform for people to still be able to like purchase GameStops from GameStop, but in a digital way. So they won't be another Blockbuster story to Netflix, how Netflix took over them. Now, the digital world trying to take over GameStop and start that, but they trying to save it. So check this out. And GameStop has a lot of cash from that they built up, and they could be debt free with a blink of an eye. They could spend the money. They got enough money to erase all their debt. So let's continue, y'all. But is good news. I don't see it going to zero anytime soon, if ever. GameStop ended 2020, January 30th, 2021, with approximately $635 million in cash. This compares to $146.7 million in short-term debt due within 12 months and $216 million in long-term debt. If GameStop wanted to completely wipe out its debts today, it could do so and still have $272.3 million in cash left over. But GameStop won't do that because cash is king. You wanna owe debt. I mean, you don't want to be in debt. That's what I try to show people. Like, I would never cash out on a car. I would never cash out on a house. I would always take that loan from the bank and pay my little mortgage or my little payment over time. Because with cash is king, I can take that cash, that $30,000, $40,000, $50,000 car I'm about to buy cash, I can put a down payment of $5 billion, and the other $45 billion I can put it into an investment like Apple, Tesla, anything, something that's going to grow over time and make me 10 times my money. Now that 40 billion is a $500,000. When if I'd have bought that car, shit, that's all you got. So keep that in mind. And so that's all I got for y'all on that. I just want to read that to y'all. We ain't gonna go too much over that. We ain't gonna get all into that. And then we got an article, could AMC Entertainment go to zero? We ain't even gonna get into that because I'm gonna just tell y'all straight up, it's not going to zero. Nah, it's most definitely not going to zero. So, but that don't mean just because these stocks not going to zero, that don't mean they going through the roof either. So that don't mean go and take all your rent money, all your money and put it on these stocks. They're still high risk, high reward plays. So with that being said, you just want to put in fun money. You want to have fun with these stocks. Like AMC, I've been put y'all on AMC since $5.50. Now will be, you done double your money right now. And now you could pull out half of your position and ride your other shares for free with no worry in the world, whether it go up or down. But we most definitely is bullish. It got a gap fill all the way up to $20. If it surpassed 20, this thing could push up. And especially if a lot of short interest, we keep intact with that short interest. The more shorts that get involved in this, them shorts will possibly get squeezed and they have to buy back those shares at a higher price, making it squeeze even higher. So we can prepare for that as well. So that's all I really got for y'all on that right there. Now let's look at the chart real quick. Like, let's see what we can expect on tomorrow. So AMC, we closed at $10.25. We was down 6% that day. We had what we opened at. We opened at $11.25. The high was $11.53. The low was $10.01. The 52-week high was $20.36. The 52-week low was $191. So if we look on the chart, I see this thing possibly pulling back to around $9.90, $9.85 on Monday. I do see a nice pullback to around $9.80 level. If we break that $9.80, $9.85, we could possibly see a nice pull strong back all the way to the low nines, around $9.01, $9.03, before we see a nice tick up. In worst case scenario, all depends on, make sure all the volume is still here, make sure all the hype is still here, make sure everybody is still interested, which I know they are. But worst case scenario, if the volume leaves this, I can see this thing pulling all the way back to 8. But on Monday, I actually see it pulling around 9.85. That don't hold up, it'll pull back to 9. But for our upward tick, once we start moving up, what we have to break through before we can see the next leg up, Hayes. So what we have to break through before we see the next push up would be $10.66. I told y'all that on the previous video. As soon as we break through $10.66, $10.68, this thing is going to fly straight to $11.50. And once we get to $11.50, we can easily push to 12, and then we'll go and retest that high on March 18th at $14. And once we broke $13.30 previously, we supposed to push straight up to $20. So the stock is being manipulated. It have a huge gap fill after it surpassed $13.30. It could push straight up to $20. And once we get to 20, this thing could push even higher, y'all. So be prepared for that. And also when we get to 20, this thing could retrace and push all the way back down. So we will keep y'all updated on that. But anyways, our price target is $15 and $20 range anyway. So my people will be protected, and we can always sell 75% of our position at those levels and let the rest of our shares ride for free. So that's all I really got for y'all this video. So, consider joining the family. We post this type of content every single day. Stock market, cryptocurrency, motivation, anything. It's the BA Show. We love y'all. God bless. Consider joining the family. We out.